Good morning and welcome. This is part of the Audit, Control, Governance, Risk and Compliance Series 1. As part of this series, we will be covering 11 areas. The details are as shown. Hi, good morning. This is part of the series on Audit, Control, Governance, Risk and Compliance. As part of the series, today we will be looking at important aspect of audit. Audit. Philosophically, an audit reflects the human desire for order, accountability, and truth in a complex system. It asks to know, can we trust the system, and seeks to answer that with evidence, analysis, and judgment. Now, think through about it. When you meet an auditor or there is an audit going on, this is the underlining question that any auditor has. Can I trust the system? And how does it trust? It requires evidence. There is an analysis that need to be done. Conclude. Audit plays a critical role in ensuring the financial health, operational efficiency, and regulatory compliance of an organization. It provides an independent assessment of an organization's financial statement, internal controls, and overall governance. In a rapidly evolving business environment, organization must establish an audit framework to mitigate risk, improve transparency, and maintain stakeholder trust. This series discusses the importance and the benefit of audit as well as the risk associated with the absence of an audit framework. Let's now understand the core philosophy of an audit. We will look at the six aspects for this conversation. The first one is assurance and trust. The primary purpose of an audit is to provide independent assurance that an organization's financial, operational, or technological process are accurate, reliable, and compliant. It builds trust among stakeholders, whether they are investors, regulators, or internal leaders. The second philosophy is on independence and objectivity. Auditor must remain unbiased and independent of the process or systems being audited. This objectivity ensures that conclusions are free from conflict of interest. The next one is on accountability and transparency. Audit philosophy emphasizes promoting accountability by examining how well responsibilities are carried out. It also drives transparency in reporting and operations. The fourth is risk based thinking. Modern audit approaches are grounded in risk assessment, focusing efforts where the impact or likelihood of failure is high. This aligns resources with strategic and operational priorities. Fifth, continuous improvement. Audits aren't just about finding fault, they are also about identifying areas for improvement. This supports organizational growth and maturity in processes. Sixth is ethical foundation. Integrity, confidentiality, and professionalism form the ethical backbone of the audit philosophy. Auditors are expected to uphold the highest of the standards of conduct. Let's now review the type of audits. There are quite a few. For this conversation, we are going to take the top 10. The first one is from finance, it's the financial audit. The purpose here is to ensure accuracy and fairness of an organization's financial statement. The focus is to review transactions, procedures, and balances to determine if financial information presented are fair and in accordance with accounting standards. An example in this case is an external auditor examining a company's annual financial report. The second is compliance audit. The purpose is to verify that an organization is adhering to relevant laws, regulation, and internal policies. We discussed compliance in the earlier videos. The focus of this audit is to check for compliance with internal and external regulations. An example is an audit to ensure a company is following environmental protection regulation. This is an example. The next is operational audit. The purpose is to evaluate the efficiency and effectiveness of an organization's operation. The focus is to examine business process and procedure to identify area for improvement. An example in this case would be an audit of a company's supply chain to identify inefficiencies. The next is performance audit. The purpose of this audit is to assess the effectiveness and efficiency of programs, projects, or operations. The focus in this would be to evaluate whether objectives are being met and whether resources are being used effectively. An example of this audit would be an audit to determine the effectiveness of a training program. The next is internal audit. The purpose of this audit is to provide assurance to management about the effectiveness of internal controls and operation. It's conducted by internal staff to identify and address potential weakness or risk. An example would be an internal audit of a company's IT security procedures. The next is external audit. The purpose is to provide an independent opinion on an organization's financial statement or other areas. The focus in this case is conducted by external auditors who are independent of organizations being audited. An example in this case would be an external audit of a company's financial statement by a certified public accounting firm. The next is tax audit. The purpose is to verify accuracy and completeness of tax returns. The focus in this case is conducted by tax authorities to ensure that individuals or businesses are paying the correct amount of the taxes. An example, an audit by RS of a company's income tax return. The next one is forensic audit. The purpose here is to investigate potential fraud, financial irregularities, or other illegal activities. The focus is to apply accounting knowledge and investigative procedures to uncover wrongdoing. An example in this case, an audit to investigate potential embezzlement in a company. The next is environmental audit. The purpose is to assess an organization's environmental performances and compliance with environmental regulations. The focus in this case is to examine an organization's impact on environment, including water, air, and natural resources. An example in this case, an audit to determine if a company is complying with regulations related to waste disposal. The last of this is integrated audit. In this, the purpose is to combine multiple audit type into a single cohesive process. The focus in this case is to examine the strength of internal controls from both security and compliance perspective. An example of this audit would be a compliance audit combined with IT audit to examine the strength of internal controls. We have seen the philosophy of audit, we have seen the type of audits. Now let's look at the importance of an audit. Why do we need audit in the first place? An audit is an essential function that ensures organizations operate efficiently and in accordance with the legal and regulatory requirements. The importance of audit in an organization can be understood in few ways. I've listed out the bullets points in front. Let's go deeper. Audit helps verify the accuracy and completeness of a financial statement, ensuring that they reflect the true financial position of the organization. By examining accounting records, auditor can identify gaps, fraud, or misstatement that can mislead stakeholders. A well-audited organization gains credibility among investors, lenders, and other stakeholders. External audit in particular provide assurance that financial reports are prepared in accordance with the generally accepted accounting principle, or otherwise known as GAAP, or International Financial Reporting Standards, or IFRS. Government and regulatory bodies impose strict financial and operational guidelines on organizations. Regular audits ensure compliance with the tax laws, financial reporting standards, and industry regulation, minimizing the risk of legal penalties. Audit helps detect fraudulent activities such as embezzlement, misappropriation of funds, or financial misstatements. An effective internal audit system acts as deterrent against fraudulent activities within the organization. Audit help evaluate internal control systems, identify weaknesses that may lead to inefficiencies or financial losses. Organization can implement auditors' recommendation to streamline operations and improve resource utilization. Investors rely on audited financial statements to make informed investment decisions. An organization with a strong audit framework attracts potential investors, creditors, and business partners, fostering growth and sustainability. Through an audit, organization can identify risks associated with financial reporting, operational process, and governance structure. Auditors provide insight into potential risk, enabling management to develop mitigation strategies. Let's now review the benefits. In summary, implementing a robust audit framework brings several benefits to an organization. These benefits contribute to long term sustainability and success of the business. Audit ensures that financial statements are accurate and reliable, reducing the likelihood of financial error or fraudulent activities. Transparency in financial reporting enhances investor and public confidence in the organization. An audit framework ensures adherence to legal and ethical standards, preventing costly legal disputes and reputational damage. Compliance with international auditing standards promotes corporate governance and accountability. Audit provides management with valuable insight into financial performance and operational efficiencies. Data driven decision making becomes more effective, allowing for strategic planning and resource allocation. By assessing internal controls, audit helps organizations to identify inefficiencies and improve operational effectiveness. Auditor recommend best practice to streamline process, reduce waste and enhance productivity. Audit help protect organizational assets by identifying area of risk such as mismanagement of funds or unauthorized transactions. Implementing audit recommendation strengthens asset protection mechanism and financial control. A strong audit framework reassures stakeholders, including investors, customers, employee, and regulatory bodies, that the organization is managed responsibly. Increased stakeholder confidence translates to greater business opportunity and partnership. An audit framework acts as a deterrent against fraudulent activities within the organization. Early detection of fraud allows for corrective actions, minimizing financial and reputational losses. Regular audit contribute to long-term stability of an organization by identifying and mitigating risk. Organizations with strong audit framework are better positioned to adapt to changes in regulatory and business environment. Let's now review the risk of not having an audit framework in place. Organizations that do not implement an audit framework expose themselves to significant risk that can compromise the financial stability, operational integrity, and overall business success. Some of these are listed. Let's go through them. Without audits, organizations are more vulnerable to financial mismanagement and fraudulent activities. Lack of oversight can lead to unauthorized transaction, misappropriation of funds, and financial irregularities. Investors and stakeholders lose confidence in organizations that lack transparency in financial reporting. Without audits, financial statements may be unreliable, discouraging potential investors and business partners. Failure to comply with regulatory requirement can result in fines, legal actions, and reputational damage. Organization may face tax penalties, lawsuits, or even business closure due to non-compliance with financial regulations. Without an audit framework, organizations lack the insight needed to improve operational efficiency and resource allocation. Management decision based on inaccurate or incomplete financial data can lead to business failures. Organizations without audits are more susceptible to financial crisis and mismanagement. Lack of accountability and internal control increase the likelihood of business failure due to undetected financial risk. Negative publicity arising from financial mismanagement or fraud can damage an organization's reputation. Customers, suppliers, and business partners may withdraw support, further exacerbating financial challenges. Financial institutions and investors require audited financial statements before providing funding or investments. Organizations without audit may struggle to secure loans, grants, or equity investment, limiting their growth opportunities. Absence of an audit framework weakens corporate governance structure, leading to ethical lapses and conflict of interest. Organization may engage in unethical practices, risking legal and reputational loss. In conclusion, audits are fundamental to the financial health, operation efficiency, and regulatory compliance of an organization. The importance and benefits of audit cannot be overstated, as they enhance financial transparency, improve decision making, and build stakeholder confidence. A robust audit framework ensures risk management, fraud prevention, and long term business sustainability. On the other hand, the absence of an audit framework exposes organizations to severe risk, including financial mismanagement, regulatory penalties, reputational damage, and business failures. Therefore, organization must prioritize audits as an essential component of corporate governance and financial accountability. By doing so, they can safeguard their interest, foster growth, and maintain trust among stakeholders. As part of this series of audit control, governance, risk, and compliance, series 1, we have covered 7 chapters at this point of time, which included the introduction, the history of banking, regulators in banking, governance, risk, compliance, and now audit. We have 4 more chapters to go. So stay with me. Let's enjoy the journey. Thank you very much.